Okay, I was making a quick video now because I just came home after a night out and I made quick 1,000 US up here, not too bad. And I realized this is probably a good opportunity to show people what I do and how I do it. So what we're looking at the moment is MNQ, which is Nasdaq, and you don't need to worry about that too much. I'll delete all this and clean it up so it's nice and neat for you. Okay, so I'm just going to show you what happened here. So when I came online, the price in the candles were just like this. So price is going up very strongly, a big push here, a lot of buying, and then another big push here. So it looked pretty exciting, right? And the reason why I took a trade here is because I could see a lot of people were interacting, and this usually means that either there's going to be a lot of momentum up or down. Like a lot of movement's going to happen, which is a good time to make money quickly. So the volume at the bottom here, these bars show you the amount of volume, the amount of people interacting. So here you can see there was not many people interacting, not much interaction happening. Then here, a lot of people got on board. Like here's probably like 5 times or 6 times some of these. So this was a really big increase in volume. And I saw this come on, and I saw this big candle printing, very exciting stuff. So I thought to myself, okay, the price goes up a lot. But if you think about how anything that goes up a lot in price eventually becomes too expensive. Like, imagine a coffee. Maybe you pay $5, $6 for a coffee normally. If you're out at an event, maybe you pay $7, $8, $9, $10. Maybe at some locations you pay like $11 or $12 and still stomach it. But if they start charging you $15 for a coffee, you're probably going to be like, yeah, alright, sweetheart. It's it's a little bit getting ridiculous. So just drink water and fucking imagine caffeine. This is the same. So as price pushes up this quickly, it's a good sign. It shows a lot of excitement for the buying, but eventually it'll hit a point where people will say this is a bit too expensive too quickly. We're only going up in one direction. I'm going to wait and slow down. And that's what I look for. So if you look here, big push up, smaller push up, and as this candle was building, so this candle was happening in real time, I took a trade. And I'm going to zoom in. So this is showing you 5 minutes for every candle. I'm going to zoom out, sorry, not zoom in. And I went to this point here. So this point here is the last time where price was pushing up, failed to push up here, and started to break down, bounced one time here, and then really couldn't get any higher and just dumped. Right, then we came lower and we did all this stuff. So what I look at is I look at the point where it's the highest point here. I draw a box here from the highest point. Then I look to where it fell in the lowest point of this one motion. So this move up green becomes red. I start drawing it, and then I wait for that red to sort of finish here, that bounce point, and then that's the high and the low. I draw a box around it using the rectangle tool, Alt Shift R, and then I draw a rectangle. And on my rectangle, I double click this to bring up middle line, so I can see the middle line. And we're going to use this, right? This middle line of this box is going to be quite important. So I would call this the last supply area, the last time where price was having a debate about which way it should go, up or down, and sellers won, it pushed lower, but it left this area where people were contesting. And a lot of people who are contesting here will actually fight again at the same point. So I'll show you here. What I look for then was, see the middle line of this box? That middle line of that box is actually where I took my trade. So I'll go here. So before we look at each candle is 5 minutes. Now each candle is 15 seconds. So some quick maths. We have 4 15s in 5, which means we are zoomed in 20 times. So before that, if you look here, I'll show one more time. 5 minutes. So this candle here, this big single candle here that pushes up. Right, I'll put a little box around it. That is going to show up here when we zoom in into 15 seconds. This part here, so that push there, from there up to here, that push is just that big candle. Like this red part here where it falls down for a few seconds is actually invisible when you zoom out to 5 minutes. Because the 5 minute candle just shows you where it started and where it finished, and the in-between actually gets washed out. But when you zoom in to 15 seconds, you actually see what happened in that story. What happened to actually make that candle look like that candle. It wasn't straight up the whole time. We went straight up, paused, came back up. Okay. So one more time I'm going to show you this. Let's do this. So this box here was the supply area where price fought. We're going to zoom into this area here, okay, and see where it touches it. So what I did was I sat on my computer here, and as price came up to this box that I drew in when I saw everything happening, I went back and drew that box in, and I saw, okay, this is the last area price for that. If it struggles to get past here, I'm going to start selling it. I'm going to short it and say it's going to come back down. I think it's going to be the end of this move up. So if you look at that dotted line, literally I saw this dotted line get tapped once. I sold a little bit here. It came back up here and it pushed through and then got rejected. So I sold even more here. I entered a short to say price is going lower. And then one more time it tapped here. And this is actually important because here, if you look, I'll show you. It's creating this shape. Let's see. It's creating this shape, yeah? Up. Don't do that. It's creating this shape, yeah? Like this. And if you look, each one is a higher low and a higher high, yeah? Let me show you this. Dun dun dun. Dun dun dun. So if you look, this is low, okay, a low. This is higher low. And what I mean by that is price moves like a snake. So it goes up and comes back and it forms a low. Then it goes up and it comes back and forms a low. But this low is higher than this low, which means you're moving up. You can also see this high is getting higher when it becomes this high. Oh. What am I doing? So you can see this is a high, this is a higher high. Lovely. But what happens? Let's see what happens here. If we go bum 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 bum. So we had this higher high here, and then it makes another higher high here. But then we come down and we make, if you look, very important, we make a new low. So we're below here now. That's just a smidge lower. So we start to go lower than here. And then when we push up, bum bum bum, we make a lower high than here. Okay, important to note that, lower high. So what I'm seeing is when we hit this dotted line that I was looking at, we hit it, we came slightly past it, and then we came below here, below this low, and then we pushed up and we didn't get higher than here. We started to go downwards, which indicates to me it's very early, right? I can see it's very early, but it indicates to me we're now doing this. Bum, oh. Bum, 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 bum. But all those bums were me making money, so it really should have been ding, 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 ding. Let's go with like, no, let's go with purple. No, pink? Pink, where's pink? Yellow? Yeah, yellow's good, okay. Yellow's good, like lightning bolt. Okay, so blue was up, you'd see the trend go up, yellow was down. And so what happened was, your boy, very smart, he saw this happening here, ba-bum, 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 and what he did was he started making money. Money, money, money. So I put my entries around here. What are you, I don't know what the fuck's going on here. Okay, so I put my entries around here. Okay, around here. And I put my exit point like just a bit up here, yeah? And so basically if it kept going higher, I lose money, yeah? No worries. But if it goes lower, we make money. And look at how much money we made. 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 We made 1,000, which is how much you can make on this account per day without them fucking getting suspicious. Because if you're too good, they don't like it. So, okay. Why did I sell here? Because I didn't just randomly pick. It actually went even lower. but I sold all of mine here. Or bought all of mine because it was short, so I bought it back. Why did I buy it all back here? Okay, because sweethearts, this area here is the beginning of the move. So the move started here, it pushed up, it came here, it pushed up, it came here, pushed up. So the reason why I put all of my exits here is because I told myself the people who are buying, they have to put their exit point somewhere. And they put their exit point generally below these levels here and below these levels here. Okay? They put their exit points here because this is basically the lows. Everyone wants to put their exit point as close as possible so they lose the least amount of money. And so they all put it really close to these areas. If they, hey, it's going to go lower, it's turning around, I don't want to be part of it. And so what happens is when price hits an exit point, like it hits a reversal point here, it almost always comes back to fuck over all the people who bought up. This may be getting too advanced, but basically these people here bought positions like this. They bought positions like this, okay? They said, I'm buying it here, and if it exits here, I am getting the fuck out of Dodge, okay? They bought positions like this. And what happens is they get greedy, and the price goes up, and they don't exit yet, yeah? They should exit, they don't exit. And so they're still holding their position. So imagine you're holding this position, it's going up, you're making money, it's going up, okay, now you're up a K or two. But what happens is, price comes back down really fast, like really fast. I'll show you. It goes down fast and goes up. It goes down really fast and then it goes straight to your exit point before you have a chance to react. Look how fast it went from here, from this point up here, to the exit point. Like, it teleported. People did not see it coming. And that's what I look for because I know how the market works. What happens is all the people who get excited during this part become the liquidity to get fucked over on the way down. So price goes really fast at this point, exits everyone who was getting really excited for it to go up, and then price goes really fast at this point here, because these are all the people who thought price was going to go up, and they put their exit points here, so that's who gets fucked over. See how this goes like down here? So even if you bought around here, and you put your gap a bit lower, like you gave it a bit of space, they try to still go low enough to get the space. And now this will turn around. See, it's like going higher. This will now turn around and do this. Bum, 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 bum. Until it reaches a point that it can't go any higher at. That could be around this first one, if we're using the same principles. Fuck, I'm getting a good lesson here. You could replay this over and over again and learn so much. So, see this area here where it came down, price fought sideways for a bit, and then finally big dump. So we draw a box there, okay? From the low, ba-bum-bum, the low there, see? That low, to the high. That high, okay? But I put it a bit further back so you can see it. And then we're going to look for price to get to these dotted lines. If it does the same thing, if it gets rejected, we're going to sell it, okay? Similarly, I'm going to draw this in. Parallel channel here, parallel channel here. If it starts to fall out of this thing that I've drawn, go from this point to this point, if it starts to fall out of here, I'm going to exit. But what I could do right now is I could buy. So if I wanted to try and make some money, I could buy at this point down here, with my exit point maybe below this, and I would want to buy to where I think this midpoint is. And I'm thinking, because it's here, it'll bounce on this edge and make its way up. Of course, betting is a coin flip, betting is a gamble, it's just probabilities and likely odds. You have to be okay with losing money to make money. But, just for the sake of this video, to see how it plays out, let's just watch this and see whether we make money or lose money. So, right on cue, as though the universe responds to me, we are making money. And you'll feel the emotions of going up and down. You go back to zero, back to neutral, and then you start making a little bit of money again, and you might dip back into negative. Could we please dip into negative? Market? One quick dip into negative, please. There we go. So we dip into negative now, so we're in the negative, and then you'll start to feel a bit of fear as your account goes, oh, now you're losing money, you're not making money, oh shit, should I close the trade early, should I exit? We have patience, we have virtue, and we wait, don't we? And the market rewards waiting, and it rewards patience. As if a snake is being charmed. Everything as it needs to be. And so I'm going to be quiet here. I'm no longer going to dictate the market. I'm going to allow you just to observe and see. And I want you to be okay with it, whether we make money or whether we lose money. And just for a frame of reference, yeah, let's pretend this is real so you really feel something. If it reaches this red point here, we're going to lose $100. And if it gains to this point here, we're going to make, let's see, 3.52, so 350. Okay? 3.5, you can see the number here, 3.5, that means 3.5 whatever you're risking. So we're going to risk $100, lose $100 if it hits this point, this red point here, and if it makes it to the green point, we're going to make 350. Let's see, let the games begin. Okay, you just lost $100. How do you feel? Oh, this trading game is fun, isn't it? So, take some deep breath. 3 ones. Let's go together. Calm your nervous system. The money's gone. But thankfully, you're going to learn something. So, here's a free lesson for you. Did you know when it was going to hit this? Did you reach a certain point you were quite sure it was going to go down and not up? I can tell you when I knew. So see how we drew this channel, this parallel channel? When it got to this point here, and it started to try to get back in, this was the opportunity for it to push up, yeah? It got back into the channel, it reclaimed it, it should have started pushing up here. When it started to lose it again and fall out, it was actually now, to me, showing that it was losing the channel. It wasn't holding the angle, it was creating this one instead. It's creating that one. And it's falling out. So as it falls out, here, this was actually the point where you start selling it and shorting it. It's actually on the underside of the channel. It's tapping the channel, but on the wrong side. It should be bouncing on inside it. Now it's bouncing outside it. So when it was here and started falling, you could have started shorting it. See how this red candle is bigger than this green candle? We call it engulfing. It means the sellers are now more powerful than the buyers because they're pushing the candles further than the buyers were. So after this candle, you could sell it. Let's say we did that, right? Let's say after this candle, we sold it. We put our exit point above here. Yeah, just a little bit above here. And we target, this is 0.7. We target like 1 point, what is this? 1.5. So you put $100 and you get $150 out, yeah? But I would go lower. I would target the bottom of this. So let's go to the bottom of this. Okay, that's 2.28. So now, if you get to here, you're losing $100, yeah? And now if you get to here, you're making 228. Oops. Okay, let's see how this goes, yeah? So, I'll delete this one for you. Boom. So, this is where I can try and show you, this is how you trade. Because it failed to push out of this, it shows you the sellers are in control, and this is more likely to be happening. Like I said, it's all probability, but it's more likely to be happening. So you want to see this now, the sellers to continue to be in control, push it lower than this, and the next point they would push it to is this one, where our exit point is, because this is where all the buyers will have their safe zone, their exit. And it's like a battle between the sellers and the buyers. So the sellers want to push it to where all the buyers will lose out, and the buyers want to push it to where all the sellers will lose out. Because look, our exit point is here. So the buyers who want to get us out would push it to here. And we would be what they call the liquidity, all waiting behind this little nodule. And there'd be a whole bunch of other people waiting behind this little nodule. And so that's how the game is played. You have to be able to understand both sides of the coin to be able to play it. So you understand that you have your exit point here because that's safe, but you understand there are people who are looking to your exit point and wanting to target that. So this thrusts right up through here. Don't be surprised. But so far, it's following the channel. See how it's tapping the outside of that? See how it's tapping the outside of that? It didn't push past it. It tapped it and then reversed. So far, that's respecting the channel. So we don't mind that. But we just wait and see. You might lose another $100. You might make $220. As you can see, it is a gambling game. However, the better you get at it, the more you can risk like $100 and make $1,000 and do it regularly and not blink. Yeah, it is a skill. Like, I mean, if you watch me charm the snake before, you can see there is a certain element of it which is less about what you're analyzing and what you're doing, and more about energetically whether you're able to receive money or not. Because I learned to trade for 8 years, and I didn't realize how easy and stress-free and beautiful trading could be until more recently, when I was able to truly be in flow with the universe. So I recommend you, if you have spiritual practices, if you have grounding practices, as someone who makes a living from being called Jesus, I wouldn't shy away from tapping into your own power and potential and just seeing what's possible. Look at that, in one candle we hit exit. That's another minus $100, by the way. If losing $200 in a row hasn't encouraged you and made you hungry for more, then sorry, sweetheart, trading may not be cut out for you. But you ought to be willing to lose a lot of money before you make money. Which is why I recommend doing a demo account so you can lose fake dollars rather than real dollars. That's all for today, guys. Have a beautiful fucking day, a beautiful life. All the wonderful respect to anyone who was able to sit through this whole thing. Well done and well gone.